Hello, my friends. Katie Day with the MOVEMETOTX Team with Real Broker here in Houston, Texas. A conversation that we have been having a lot lately with clients, with sellers and potential sellers, is the appreciation that we have seen in the market over the past year. Just last week, CNBC posted an article titled "Homeowners Got $2 trillion Richer During the First 3 Months of the Year," where it outlines the equity increases that homeowners saw in the first quarter of 2021. They said that those with mortgages, which is about 62% of all properties, saw their equity jump by 20% in the first quarter as compared to a year earlier, according to CoreLogic. This represents a collective cash gain of close to $2 trillion. Per borrower, the average gain was about $33,000. High demand for homes spurred by the pandemic amid an already low supply caused bidding wars across markets all over the nation. Record low mortgage rates for much of last year only added to the buying frenzy and helped fuel these price gains. All of this sounds great if you want to sell your house, but what most people start thinking about is a housing bubble and that we will see a wave of foreclosures coming from the forbearance programs as they expire. As of June 1, there were still just over 2 million homeowners in pandemic-related mortgage forbearance programs, according to Black Knight Real Estate Data Company. As these plans begin to expire, having home equity will help those in trouble. They could still sell their home and get out with a potential profit if they have to. CoreLogic's chief economist said that this reduces the likelihood for large numbers of distressed sales of homeowners to emerge from forbearance later in the year, and also said that the average homeowner now has about $216,000 in equity in their home. Some additional good news for the housing market is that the share of borrowers in a negative equity position, owing more on their mortgages than what their home is worth today, consequently dropped. This is something that led to the financial crisis and foreclosures that we saw in 2008. As far as stats go, from the fourth quarter of 2020 to the first quarter of 2021, the total number of mortgaged homes in negative equity positions decreased by 7% to only 1.4 million homes, or 2.6% of all mortgaged properties. And annually, the number of underwater homes dropped by 24%. The CNBC article states that home values are expected to cool off in coming months because buyers are already hitting an affordability wall. Nationally, many markets are saying that sales have begun to slow a little bit, and with that, prices will normally drop a little bit as well. Home prices are not expected to crash since there is still a very strong demand for housing, and the demographics support that going forward. As prices moderate, buyers will come back. Unlike the last time that home prices crashed, today's mortgage underwriting is far more stringent, so as buyers come back to the market, there's fewer or less probability of a housing crash. So what does all this mean? Home prices have rapidly increased over the past 12 months. If you own and you've had any thoughts of moving maybe this year or next year or in the future, this could be a great time to capitalize on the seller's market that we're currently seeing. Perhaps now is the time for that "I'd only move if I could get blank price." If you're thinking about buying, as sales slow, prices may drop, which could give some relief in this current market. But something else to keep in mind is if mortgage interest rates also increase, that will diminish your purchasing power. So even if prices come down, if interest rates go up, you may be in the same boat. Either way, where we sit in Houston today is about 55% less inventory on a year-over-year basis. Last month in May, we saw single-family home sales leap 48.2% with 9,702 sales in the greater Houston area compared to 6,546 in May 2020. That marks the greatest one-month year-over-year sales volume increase of all time and is the market's 12th consecutive month of positive sales. On a year-to-date basis, home sales are leading 2020's record pace by 29.5%. The single-family average price in Houston climbed 29.7% to just over $387,000, while the median price rose 21.7% to about $304,000. The time that it took to sell a home fell by more than 3 weeks versus May of 2020. The days on market, or the time that it takes from listing to going under contract, went from 58 days on market to 34. Due to strong buyer demand and surging home sales, inventory registered a record low of a 1.4-month supply compared to 3.3 months at this time last year. That figure is unchanged from March 2021 and is still below the current national inventory level of 2.4 months that has recently been reported by the National Association of Realtors. Months of inventory is the time that we measure for properties to be on the market. What it means is if no more homes came on the market and homes continue to sell at the pace that they've been selling, when would we run out of homes? That's the months of inventory. Broken out by housing segment, May sales performed as follows. From 100 to 150K, sales decreased by 31.5%, and from 150 to 250, they decreased 6.5%. These price point decreases in sales are mainly due to a lack of inventory. In the higher price points, we saw significant increases in total sales. From 250 to 500K, they increased 82.8%. 500 to 750 increased 166%, and 750 and above increased 291%. Anyways, if you've got any questions on what's going on in the real estate market, especially if you are thinking about purchasing either in 2021 or 2022, perhaps you just want to know how much you could sell your home for in today's market, shoot me a DM or give me a call. Our team is always happy to set up a strategy session to come up with a game plan that works best for you and your financial goals. But hope that you all are doing well, you're safe, and having a great day, and I'll talk to you soon.